Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and you guys know what today is, right? It is Monday in the market. Market Mondays. Today was another one of those wild and crazy days where the market took us for a ride. But hopefully, many of you still made money because there's always money to be made. And hey, I'm making money. So before we get into it, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. All right, Market Mondays. Market Mondays. So today, the market, the indexes are primarily flat. Majority of them are flat. However, most of the markets and individual stocks are down. So it's pretty much, I'm gonna say it's more of a mixed market, and we're gonna take a look at the heat map today, just so cause we haven't taken a look at it in a while. But I think it's majority mixed or flat. Today was, I guess it was one of those days where I told you guys I think last night I told you guys this week would determine whether we go back up a little bit or whether we stay down. Seeing that we're flat right now, this could be a point where we start to consolidate for the remainder of this month or something like that. I don't think we have any other negative news coming besides earnings this week. We do have earnings on some of the major retail companies like Walmart tomorrow. I believe Target is this week. It's definitely several large retail stores and retail chains that are on the earnings roster for this week. So it's something we definitely got to keep our lookout for because it's going to definitely make a difference and impact whether the market continues to go up or come down. And I believe that's starting tomorrow with Walmart being one of the early ones. So we definitely got to keep our eyes open for that. But let's take a look at it, right? Let's take a look at this market. Let's see what we got for today. So right now we have the Dow Jones down 0.083% for the day. I'm sorry, up 0.083%. That's super flat. S&P 500 down 0.39%. The NASDAQ tech heavy index, the NASDAQ is down 1.20%, and you're gonna see all the tech, as you can see here already. Tech took a beating. Neo did decent, only up 1%, still flat. SoFi, which is a fintech, did decent, up 2%, but the rest of the tech beat down, took major beat downs. The Russell down 0.52%, and the VIX down 4.85%. This VIX number coming down is definitely a great thing because that means our fear and greed index. That means it's going back to some greed versus that fear. We know when this number is up, that means fear is at all-time highs, but when it's coming down, fear is starting to calm down and we can potentially see some green. However, we're still in this $27 range. The closer it is to 30, that means we still have a high level of fear. Just something to be aware of, something you guys keep in mind, right? Keep in mind. So one thing I want to take a look at, right? Because the NASDAQ is down 1.20% for today, let's look at the year to date. Year to date, the NASDAQ is down 26.34%. And year to date is actually starting in January, right? January 1st, let's say 3rd, which I guess was the first trading day of this year, up till today, May 16th, down 26%. Looking at the NASDAQ, definitely bear market, right? Let's check out the Russell, 21%. Now, these two indexes, because they're higher in growth stocks and tech, that's why I think they're more taking the heaviest beat downs because they're heavy on those, right? Heavy on high growth and heavy on tech. Now let's check out this company like the S&P 500. So I'm checking out the S&P 500 because remember I told you guys at the beginning of this year we said we were going to do VTI 80% of our account and we're going to do fintech, right? Fintech, not fintech but financial. So banks, and we said we considered some commodities like Walmart, Target, and we considered some healthcare. Look at this. So the S&P 500, although it's down 16% year to date, so January 3rd up till today, it still has not hit that bear market of 20% like the NASDAQ and Russell. So if you guys balanced out your portfolios well at the beginning of this year when we started doing this thing, we were talking about it, if you went all in, you're down 16% right now. But if you dollar cost average, right, like what we've been talking about, you guys know every time we get paid, every 2 weeks, or every time we see something like this, we add a little bit in. So VTI or VOO, which are basically monitoring or following the S&P 500, that you would be beating the 16.44%. So you would already be beating the market this year, right? So every 2 weeks you got paid, you would already be beating this market if you've been doing what we talked about. So adding a few dollars in every 2 weeks or whatever the case may be, because the high currently, I want to say, and we're gonna let's look at BTI because that's the one I like, right? That's the one I invest in. Year to date is down 17.72%, right? Very close to the S&P 500. So say for instance you start in January 242, and that's January 3rd, right? So 2 weeks later on 216, you put in another $200, you bring your average down. We're gonna say 24th was actually more than that. That's more than another one. You bought again at the high, buy here at the low, buy here at the low. You would probably be at about half this, right? Whereas it's down 17%, you will probably be only down, I would say, about 8 to 9%, and doing much better than the market is right now, especially if you bought this dip down here, and with the expectations that things are definitely coming back up. So hopefully you guys have been doing, as we talked about, right, dollar cost averaging, so you buy over time, not going too heavy in anything else, because VTI is going to be the one, I think, going to be the one that we're going to continue because it's long term, right? We're investing in this. So you got to continue to do that over the long term. Let's look at the Dow. The Dow year to date down 11.92%, so even less than the S&P 500, which is great, right? Because if you want to invest in that, you can. There's many other ways to invest in the Dow, so definitely keep your eyes open for these type of things. These are the play. This is why instead of us going tech heavy this year, which we would be down over 20%, we went with the S&P 500. We went financials, and we went with consumer goods like Walmart, Target, Procter & Gamble, things of that nature. So you guys definitely keep your eyes open for that. Apple actually being a good one too, that we said we were going to invest in, Apple and Microsoft. And I just got to check those out, right, just to make a point. It is down 20%, but again, if you were dollar cost averaging, you will be beating this, and this will definitely see a lot more growth than others when we come out of this thing. Apple is one, y'all know it's a big dog, right? So it's going to see a lot more growth than a stock or ETF like VTI would or VOO. So when it comes out the gate, it could potentially see new highs again, right? We know the highs over here, 182. So from the highs, it's down 20%. Like I said, January was when it hit its high actually. So that's really crazy to see that. Yeah, 20%. So it's something we got to keep our eyes on, just kind of be cognizant of as we continue to invest throughout this year. Okay, so I wanted to check out the Fear and Greed Index. We got a 12 right here. 12. So we're still sitting at that 12, explaining why the markets are flat. Hopefully you guys made money. Today I traded Tesla on the way down. Tesla took a beating on the way down. I got it first thing this morning. It came up here. I caught it going down here. I even got out early. If I'd have held longer, I'd have been paid. But I got out a little early. I took about a $800 profit, I believe, on this one. And if you guys follow my Instagram or my Facebook, then you definitely saw that. You saw about two puts on this, and I watched this thing come down with the rest of the market. Eventually, though, for some reason, Tesla hung out on its own and did not come back up. As you see here, the SPY came down, but it came back up and pretty much just stayed flat for the day. Again, flat. Tesla, however, came down and stayed down, which I guess that's because it's part of this tech-heavy NASDAQ. And you see most of these are down pretty big for the day. Just something to make ourselves aware of. So let's check out our stock market heat map, right? We got to take a look at this. Look at the things that are doing good. Energy. Have you seen your gas prices today? The gas prices have went up again. Here, where I am, I told you guys last week, I saw gas. I paid $4.09 for gas, I believe. On today, I saw gas as high as $4.37, and then on the diesel was in the $5 range. And I'm in the South. Texas right next door, and gas prices are going insane. So this is just going to show you that, I mean, oil and gas are really becoming kind of unstable. And I even had it here for you. So today, even though it's up pretty flat, a barrel of oil is currently sitting at $114.32. How much higher could it go? Did you guys jump in XLE? Are you making money on that? Is it being profitable for you? Because we already know that's the energy select sector, right? Look at it, up 2.64% today, while everything else was down and flat. So it's making you money. On the week, up 7.30%. We talked about it last week, so you could already be up 7% on something if you invest in it. So you guys just keep that in mind. Again, it's one of those ETLs. Now, it's not for the long term. It's while we're going through what we're going through now. I'm not going to say we're in a recession, but this recession-like period of the economy. Before I'm going to wait until the official numbers come out and they call it a recession. But as far as I'm concerned, we're taking a beating, and that's where we can make our money at this energy sector. It's the only thing really staying strong for now. You got to be careful. Make sure you get in at a good price. Make sure you watching this thing when it starts to come back down, when things start to settle down. You want to make sure you get out of there and take your gold with you, right? Take your money. Always take your profits. So just looking at this, the only sectors that are doing well as of today are healthcare, which we talked about. Even financials are not doing very well, but they're flat. And energy. Healthcare and energy are the ones making money today. And we got to continue to see how this week goes, right? Because I told you guys, I think this week is going to be very essential for the markets. And I even have it ready again here, just looking at it, right? Let me full screen this chart. As you guys see here, I have my chart back ready for you, right? And I told you guys, we see this thing, and this is the day, right? We can go out, we can look at the week, we can look at the month, and you see even here, right? We saw for the month, the MACD crossed back downwards. But as far as short term, what we're looking for on the day, short term, we see this thing, the supply and demand lines on the MACD seem to be trying to cross back up. They seem to be trying to cross back up right here. And what I'm hoping to see is at least one bullish week, one good bullish week, especially since we've hit these crazy lows, right? We hit some crazy lows down here. What is it? 382, 382.05. 382.06, I think is what it says this low is. So we definitely want to keep our eyes on this, and I'm really hoping that we start to see some green this week, especially right now where we have a chance of rebounding, and we need a rebound because we've taken a beating like no other. Seeing indexes down as much as 20%, so it's just something to be aware of. Crypto still taking a beating, right? We're not even gonna talk about crypto too much because you guys know, right? Right now, we are holding out on crypto unless you're buying into these two big dogs, Bitcoin and Ethereum. These are only coins that we're looking at right now. Everything else, we're being very aware of and just kind of paying attention, keeping our eyes open for anything that might happen. Hopefully, you guys did not get caught by the Luna bust, right? Luna busted. Hopefully, none of you guys got caught by it and you took your profits out on that thing. And that's where we at right now. Again, make sure this week that you focus on your strategy. Make sure that you continue to be profitable. I will be trying to drop a video more detailed on options very soon because a lot of people been asking. I want to make sure that everybody's educated because what tends to happen is in this market, I can't tell you, technically I'm not a financial advisor. I cannot tell you to trade one thing versus another, right? So what I try to do is I can try and teach you what I do to make my trades and how I successfully make my option trades, right? So you chart these things out and you say, hey, this is where we're going, this is where we're going. You know, you can predict price movement. You can make educated guesses on, hey, well, do I need to buy a call or do I need to buy a put? But at first, I'm going to start off with the basics because people continue to ask me a lot of questions, but they haven't gone out and done the research yet. So I'm going to make it easy for you, right? That's my job. I'm going to make it easy. I'm going to make a video for you guys, giving you pretty much everything I think you need to know because I like the KISS method, the keep it simple, stupid method. So I'm going to give you guys options, hopefully very soon. I got to plot this thing out in the KISS method, and hopefully you guys love it. But for now, I thank you guys for joining the Journey to Become Wealthy. Hopefully you enjoyed this video. Make sure you like and subscribe to the channel. Hit that notification bell, and I'll see y'all later.